It's Accountech Bytes, nifty news for number nerds, rounding up the latest from the world of accounting technology with me, Tom Herbert. Thank you very much for tuning in. And if you find this useful, please remember to like, subscribe, or follow. First up, a massive thank you to everyone at the Finance, Accounting, and Bookkeeping show who found the time to come and speak to me about the video, the podcast, just wanted to shoot the breeze about all things accounting tech. It was great to see everyone. I've still got a little bit of croaky conference voice, but it was a fantastic couple of days in Birmingham, ready to do it all again for Fab 2027. I may not be able to get back to everyone's messages straight away, but I will try. Now at Fab, HMRC was on one of the main stages on both day one and day two, announcing that they'd had 80,000 sign-ups for its Making Tax Digital program. Well, less than a week after the event, they have now hit 100,000 sign-ups. Just 740,000 to go. We've also got a boatload of MTD news, so let's kick off MTD Corner with news that tax filing software Apari Pro has announced a partnership with Wolters Kluwer to help accounting firms manage non-digitalized MTD clients. So according to this from Apari, its data capture tool allows Wolters Kluwer clients to share income and expense info and file those quarterly updates. Now, I know Wolters Kluwer has a bridging solution to file with HMRC. I'm not sure whether that means Wolters Kluwer's full solution won't be ready for mandation. I haven't had any word on that. If you know, pop a comment below the line. Next up, and business banking solution SumUp. Well, they become the latest fintech or bank to announce a partnership with Sage to help its business customers cope with Making Tax Digital. Now, I haven't done a video since I attended the Intuit Get Connected event in London. It was a very slick event and great to see so many accounting web readers there. The event itself was quite light on product announcements, but the product announcements that were featured were certainly interesting. So the day began with news that Intuit was rebooting its QuickBooks Sole Trader app. So Sole Trader came in 2024 to replace the self-employed package, but Sole Trader itself will now be replaced by Sole Trader Plus, which apparently has a lot of the Sole Trader features plus Intuit's new business feed. The self-employed package is still around, but isn't MCD compliant. QuickBooks chap Aaron Patrick goes into this change in a lot more detail, particularly around releasing a new MTD product with less than a month before mandation. It'd certainly be interesting to hear the reasoning behind that. Another announcement from the Intuit show was that they'd partnered with landlord software Hammock. So I believe QuickBooks can handle income from a single property for Making Tax Digital. But if things get more complicated, for example, income from a foreign property, joint and multi-property businesses, then Hammock would be the default solution for that. Back to the banks briefly, and we've covered this before, but Sterling has made it official now. They've launched their Making Tax Digital tool from within its system. If you haven't listened to or read my interview with Sterling Bank's Dan Hogan, who founded Ember, the tax tool that Sterling bought to integrate as this tool, then it's well worth a listen. And finally, on the MTD beat, the ATT's Emma Rawson brings us news that HMRC has published stats on sectors and geographical regions affected by MTD. Unsurprisingly, the most affected region is London, with 167,000 self-employed and landlords expected to be mandated into the programme, with the North East having the lowest numbers. Perhaps the most interesting stat is that the largest industry sector affected is construction, so 250,000 of those in scope, followed by real estate and professional, scientific and technical sectors. You can find a link to the full publication, along with everything else in this video, in the link in the description. Now, I mentioned the Finance, Accounting and Bookkeeping show at the top there. Well, myself, Matt Ord and Richard Hattersley from the editorial team sat down at the show to record a podcast all about our day one highlights and what we were looking forward to for the rest of the year. You can find that by searching for Accounting Web on your pod player of choice. Let's take a look at some new stuff now. And friend of the show, Nick Stobbs, is back with a new tax review automation tool. So Syntax is a tax technology system designed to encode 10 million words of the UK tax code, get that into machine executable rules, and allow agents to spot risks, errors, and planning opportunities across their entire client base. Announced that fab was William. So this is a new tool from fintech platform Apron. So this is an AI tool that you hook up to clients' emails, and it's designed to hunt down missing paperwork, extract that data, and then push transactions into the general ledger system. And congratulations also to Apron for making the Sifted 100 list of fastest growing companies here in the UK. They're in here at number 3. I wouldn't call this table stats heavy per se, but the overall ranking seems to be determined by your 2-year revenue compound annual growth rate, and Apron seems to be going great guns in that department. Another fab launch and AI data capture tool, Easy Capture, promises 99% accuracy and agentic bookkeeping to move firms beyond simple data extraction into automated intelligent workflows. Thank you to friend of the show, John Oakley, for filling me in on that. And as we're talking AI, it would be remiss of me not to remind you that Accounting Web has a specific AI email. It comes out every Monday, so visit our newsletter page, scroll down, tick the box, and hit the yellow button. A bit more new stuff before we get into the news, and accounts receivable app Chaser is introducing a new cash flow tool. So with this new feature, Chaser users can forecast cash flow using real invoice data and expected payment timing, adjust forecasts, and potentially identify shortfalls or surpluses earlier. Now, Zama and Sodium sound like they should be on the periodic table, but they also belong in the accounting technology world. So anti-money laundering tool Zama has just announced an integration with Practice Management Plus solution Sodium, the first phase of which maintains real-time progress of client risk assessments. Let's get some news. And as we moved into the weekend, we were greeted with news that Companies House had left confidential details of more than 5 million companies at risk, as logged-in web filing users could utilize their back button to view and amend items for literally any company on the register. So they could see or change director names and addresses and potentially upload fraudulent accounts. Companies House web filing was down over the weekend, but it's back up and running now. And according to Companies House, that flaw has been fixed, but this isn't the last you'll be hearing of that. I think they've self-referred to the ICO over this GDPR breach, which apparently has been around for about 5 months. An update from our resident HMRC botherer fact checker on the Any Answers forum here. They've had an email from the SDST, or Software Development Support Team at HMRC, about the forthcoming introduction of multi-factor authentication for agents to sign in to HMRC. According to this email, multi-factor authentication has been in testing with a small group of agents and is potentially due to go live at the end of June 2026, subject to successful testing. MFA has been a bit of a hot topic recently, as a number of agents have found their accounts hacked by unscrupulous criminals going in, changing their bank details and submitting fraudulent claims. However, larger firms have always pushed back against using it because, as Accounting Web member John the Good puts it, in practice, it's almost a full-time job to manage allocating clients to staff and ask them to log in and out. More when I know more. Enjoyed this interview from CFO Bruce Courtney Vian with Xero CFO Claire Bramley. The big talking point being the collapse in tech shares, partially driven by AI disruption. Bramley's obviously convinced Xero has what it takes to ride out the AI disruption, which she points out has nothing to do with near-term fundamentals. Xero's revenue and subscription numbers rise. But perhaps the most interesting part of the interview is that Xero is considering a move to a hybrid monetization model. What does that mean? Well, it's a base subscription plus usage links, top ups, and add on type offerings for heavier users to leverage over time. Now, another way that cloud accounting software seems to make money is via adverts in their platforms, which I've always found a bit odd that happens. Joel Anderson, CEO at ForMind, puts it best. Says, I pay for accounting software. I didn't agree to let it advertise inside my invoices. So according to this, Xero's allowed Stripe to advertise inside the invoices it, at ForMind, as a business, sends to its clients if it detects the email address receiving it doesn't have a Stripe account yet. Now, this example features Xero, but they are not alone in this practice. The majority of cloud accounting softwares do similar, and I'm not massively convinced that that's the way to a healthy partnership. Well, that may be old-fashioned. Now, American expense management fintech Ramp has expanded into Europe with the acquisition of Billhop. I wrote about Billhop about 18 months ago. It was originally a tool where you could pay invoices using a credit card, including HMRC, but they had a bit of a retrenching and decided they didn't want small businesses in the mix. So moved their sites to enterprises, and it's now been snapped up by the New York fintech, with integrations beginning this summer. An accounting platform, Silverfin, has a new CEO. Anne Mays is an internal promotion. She steps up from General Manager International. As long-standing CEO, Lisa Miles-Heald steps away from the business. Congratulations, Anne, and best of luck for whatever's next, LMH. And that's your lot for today. Thank you very much for watching. As always, please remember to like, follow, or subscribe. I'll be back with another video next week. Bye for now.